Hello, traders. Cousin Vinny coming to you from theclosingprint.com on Labor Day, Monday the 4th, with your weekend video newsletter. This week we'll discuss the indices continue to move higher, call walls shifting upward, and breadth continuing to improve. The S&P 500 rallied last week, closing near the highs after fading most of August. We finally bounced 2 weeks ago with NYMO at 108. It turned along with the New York Stock Exchange McClellan volume oscillator, which in September, October, again in March, did exactly what we had expected this time around, with a follow-through and more bullish price action. The S&P Equal Weight Index also led the markets after bouncing at its 200-day moving average, with the number of stocks above their 50-day and the number of stocks above their 200-day, both climbing to end the week, looking for a follow-through along with CCI as we start the first full week of trading for September. Breadth thrusts advanced decline percent, in this case, all pushed higher, with the NASDAQ hitting the plus 30% level. It's just an area that we need to start paying attention to going into a seasonally weak second half of September. We'd look for this to follow through, and most of the other indices for the S&P 500, mid-cap and small caps, to reach that level as well. We also have NYMO oversold 2 weeks ago, Thursday. That turned from that maximum drawdown and capitulation to a more bullish follow-through as institutions bought stocks. We have NYSE turning up as well. The cycle is up again into one of the seasonally weakest times of the year, August and September, for the industrials and the S&P 500, as well as IWM and the NASDAQ. So be aware that this time of year we could see a bit more selling, but generally the markets are bullish, with 15 bullish indicators, 1 neutral, and 4 bearish going into this week of trading. Yields and the U.S. dollar are the caveats that we need to pay attention to, with the 10-year yield making higher highs and higher lows, continues to threaten this October high that led to the current bullish trend, while at the same time junk bonds continue to move higher. This risk-on asset will plunge when market participants in this particular asset fear a bearish trend is about to develop. So keep an eye on junk bonds. Also watch IBB, IWM. The New York Stock Exchange advanced decline for bullish signals as this continues to move higher. We'd like to see crude oil pulling back a bit from its bullish trend. We also need to see the U.S. dollar fade a bit, creating a headwind for U.S. equities that trade overseas, like Microsoft, NVIDIA, etc. And finally, we want to make sure that the commodities don't continue this bullish trend. That creates a headwind for equities as well, like we saw back in 2022, and in the most recent weeks, rallying back above its 10 EMA. 10 EMA is bullish on the CRB index. Commodities continue to rally. So that's a headwind for U.S. equities as well. And as we mentioned, we have 15 bullish indicators, 1 neutral, and 4 bearish. The 4 bearish relate to the 10-year yield, the CRB index, the U.S. dollar, and seasonality. So as we start this holiday shortened week, be cautious as we open on Tuesday. You can see IBBs in a range, but bullish. Real estate, IYR, trying to get back above the 10 EMA. Transports, higher low, back above its 10 EMA. These weekly time frames give us an idea of the strength. As you can see, with semiconductors, higher lows, higher highs above its 10 EMA. Materials, communications, energy, financials, industrials, technology, with defensive sectors trailing off, exactly what you want to see. XLP, XLU, XLV all weakening, while consumer discretionary continues to rally, with the latter, XLY, outperforming XLP. What you'd want to see in bullish conditions, you can see how consumer staples outperform consumer discretionary here at the peak in 2022. That was a sell signal that we alerted members of before the market started to accelerate lower. So while we have 15 bullish indicators coming into this week, we do have 4 bearish, and we need to respect that. Start with a bit of caution and look to the watch list for direction. 2 weeks ago, we told you that the IBD 50 was set up ideally because most of the stocks were oversold. Stochastic finally turned. Many of these have stochastics near overbought. We do have stocks like ARGX, Argenx, with stochastics turning at 50. That could follow through. Booking.com with the travel and leisure sector doing well, pushing higher. We have several stocks on here that could see a follow through, like Freshworks, Interactive Brokers, with its stochastics turning higher just below 50. And some of the Chinese stocks like Li Auto turning higher, volume picking up, with many stocks on the IBD 50 with high volume. You can see Modine above average volume, trending along its 21-day moving average. And stocks in the energy sector like Noble Energy breaking higher on above average volume, stochastics rallying. While many stocks from the energy sector did fade last week and turn on Friday, you can see Constellation Energy here turning, stochastics set up pretty nice. With Hess Midstream Partners also turning higher, stochastics oversold, MACD turning, volume picking up. Western Midstream Partners, WES, bouncing above its 100-period moving average, trying to get back above its 50-day, and stochastics oversold and turning. Acadia Pharmaceuticals also pushing back up against the 50-day moving average, stochastics turning. Natural Resource Partners consolidating for the last 3 weeks, looking for a push off of this level. It's pretty thinly traded, stochastics oversold. Some of the interest rate products like Simplify Interest Rate Hedge ETF, that's also pushing higher. Stochastics turning, look for a break to the upside. TK Tankers and some of the shippers look like they might continue with a bullish trend off the 50-day moving average. Stochastics turning, MACD turning. CVR Energy turning higher, volume needs to pick up, but many of these energy names have turned. Cheniere Energy seeing an uptick in interest in liquid natural gas. LNG moving higher. Looks like it might break above 167 this week. EOG Resources and FANG Diamondback looks like it's going to continue this week as well. Forum Energy, Halliburton, Dyno, and the refiners. Make sure you keep an eye on DK, Delek, and Valero. Both of these look pretty good going into the week, with price action pushing off the 21-day after a cup and handle pattern has formed. We're looking for stochastics to turn up along with MACD. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. It's Monday the 4th. Happy Labor Day. I'll send out a watch list later tonight around 12 o'clock midnight on the East Coast, around 9 o'clock on the West Coast, so be sure to check that. And also check out the names in the list below, which have some potential for follow-through again this week, with 15 bullish, 1 neutral, and 4 bearish indicators going into this week. We'll start off with a bit of caution, and we'll see you in the morning. Take care.